Hello, everyone, and welcome to another episode of Small Caps. My name is Jess Holland, and I am your host for today's interview with ASX-listed Beam Communications. Ticker code is BCC. Beam Communications is a leading local satellite technology specialist. The company has been around for over 20 years and has successfully developed and commercialized several world-first satellite devices. These are sold in Australia and all over the world. Joining me today is the President and CEO of Beam, Mr. Michael Capocchi. Michael is based in Chicago, and he has over 25 years of experience in the ICT industry and has held several management positions in addition to his role at Beam. Also joining us today is Mr. Dean Sleigh. He is the CFO of Beam, who has an equally impressive resume, having worked with a number of massive organizations, including Tabcorp, Suncorp, and NAB. So welcome, Michael and Dean. It's a pleasure to meet you both, and it's great to have you with us today.
Hi, Jess. Thanks for having us.
So Michael and Dean, from what I've read, it looks like the company is really starting to ramp up and perform well beyond its market cap. What are the key takeaways for FY23?
I think the important thing is our results for FY23, are very impressive, and we're obviously very proud of where we've ended up, and our guidance reinforces that. So, our guidance was very, very strong early on and supporting $40 million of revenue, which is obviously a record revenue for the company, $4 million of EBITDA, and around $2 million of NPAT. And we're also exiting the year with $5 million of cash in the bank. The outlook for FY24 also looks very much the same as where we are for FY23. So we're quite excited that, we're at an inflection point in the company, and, the results are really reinforcing, I guess, the opportunities at hand across multiple segments of our business, whether that be through the Beam business, through the Sat Phone Shop business, and also our Zolio joint venture, and the growth in recurring revenues across the business and supporting the profits that we're now starting to see. So we're very excited to, where the year has ended up, the opportunities that we have, and obviously continuing to expand into new markets with new product sets. And really, I guess, in a market segment in the SatCom space, which is becoming front of mind for a lot of people. And, for us being in this business for 20 years really holds us in good stead to continue to grow in this important sector.
Yeah, excellent. And so just talking about profits, Beam recently issued a very bullish FY23 guidance. So can you tell our audience a little bit more about that?
Yeah, thanks, Jess. So we've done some releases in terms of guidance a couple of times during the year. Pleasing to say that, they've always given us confidence in terms of where we will land for the year. So the year-end preparations are still underway, but we're pretty confident in terms of $40 million worth of revenue and over $4 million worth of EBITDA. $2 million plus of NPAT is looking pretty good from where I sit today, closing cash in the order of $5 million. So really that growth has been driven by a strong performance across all the business. So 69% revenue growth at the headline is what we're talking about. All the business has contributed to that. Core Beam, the Zolio elements of the business have been strong. Satellite phone stores continued to perform for us. So we're enjoying strong performance in all those markets. I think what's behind that is really an expansion in the use case by a lot of customers. We're seeing post-COVID recovery in many markets across the world. And with the investments Iridium have made in their new satellite constellation, there is an element of upgrade of equipment across, devices that are in buildings, ships, and the like. So we're enjoying strong momentum. We look forward to FY24. We don't see that changing. We think these conditions are the setting as we look forward.
Thanks so much. So Beam for the first time has released financial information on its 50-50 JV partner, ZOLEO Inc, which you just mentioned. So how much value do you think investors should, be subscribing to Zolio as a product of Beam?
I think at the moment, we recently released the fact that we have around 70,000 customers globally for ZOLEO Inc.
Sure.
It's an important number to reinforce the investment that we've continued to make in this joint venture.
Yeah.
The product is still, quite new in some markets. We're seeing a lot of growth in the market in the personal communications device, which obviously we're piggybacking off the wider market, and Iridium's reporting some substantial growth, within their business in the personal communications device market. And, Zolio is one product that, fits directly within that space. We see the opportunities for the recurring revenues that grow for that with the subscription services, value-added services, and usage that contribute to the benefits that we enjoy from the Zolio investment. I think the investor community, to a certain extent, is just starting to appreciate the significance of the Zolio investment, which was why it was important for us to, ensure that our investors understood, the subscriber base that ZOLEO Inc. does have and the revenues that are associated with that. As the Australian market continues to grow, we launched that product during the early days of COVID. But, we're seeing some very good opportunities both in the consumer market and the enterprise and government space since we've started to launch some value-added services around ZOLEO Inc. and quite excited about, what that will continue to contribute for us.
Wow, okay, interesting. And so just pivoting a little bit. So I noticed that you guys have put out another stellar quarter with very positive cash flows. This really sets Beam apart from other micro caps, listed in the market. Can you tell our audience how sustainable is that cash flow?
Thanks, Jess. So cash flow management is important to us, and the nature of the business and the nature of the operating model in recent periods has really consumed cash as we've increased our investment in trade working capital to secure the revenue growth. Like many comparative organisations, supply chains been challenged in the last 18 months or so. So inventory deposits, larger minimum order quantities and the like have been a feature of the business model. We're seeing that abate now. Okay. We're also seeing the investment we've made in inventory translate into finished goods and convert to sales. So we would expect the business model to continue to be cash generative. I think if we look across the history of the business over the longer period of time, typically the business model is cash generative. However, post-COVID, supply chain disruptions, we have been caught with an investment and growing investment in TWC, but that's unwinding, and certainly FY23 reflects a pretty significant unwind, and we expect that to continue into FY24. It's a significant effort for the team to manage that supply chain. There's many suppliers involved in the product production. There's a whole range of different cycles involved. So that's a significant space for the broader business, but we're very conscious of the need to have the appropriate TWC investment and the conversion back to cash.
Yeah, thanks, Dean. So now let's talk about costs. So what are the key Capex requirements for Beam going forward, and how does the company ensure an acceptable, return on new development products?
So, Jess, we've been pretty heavy on Capex in the last few years. We've developed Zolio, launched that to market. We've launched the new Iridium GO exec device to market. So these are quite unique times in the company's history. The Capex profile is very much focused around confidence that there is a product that the market wants. So we're not involved in speculative R&D and developing products we think there's a market for. And that work is ongoing by the engineering team to make sure that we can produce engineer design fit for use products for which there will be a viable use case and a viable customer segment. We're lucky that we work with some of the best satellite providers in the world, and we exchange a lot of technical detail and insight and market analysis with those guys as we build out those business cases. So whilst we've looked back over the last 3-4 years, the Capex spend's been significant. We've got plenty of capacity for Capex going forward, but its cautious use really will be a feature of the business going forward as we look to try and roll out of what's been a pretty heavy Capex period into a more sustainable setting. The other important point with Capex is how long the products last for. Typically in this space, products will last for well beyond 5 years.
Okay.
So the Capex investment has a long tail. We have conservative accounting settings around it. So the profits that are derived from the products, really get delivered to the P&L over a long, long period of time.
Sure, that's excellent. Now, Michael, I'm going to pivot back to you. So there's no doubt, the mobile satellite services market is just booming at the moment. You now have the likes of Tesla and iPhone coming into the arena. So how does Beam stack up against the competition?
Yeah, that's a very good point, and I guess the benefit we have is that we used to operate in a very niche market for many years in the SatCom space. In the last 3 to 5 years, SatComs has definitely become something that's much more mainstream, and you have very large companies and corporations that are focused on this space, whether it be from Starlink to Apple or others that are looking at opportunities to access the satellite space. I guess we're very comfortable with where we sit. We believe we've done an extremely good job at always staying at the forefront of the technology. The partners that we have, we do work for 3 of the 4 larger mobile satellite services operator. Iridium is by far the most significant part of our business today, and Iridium continues to be very, very successful. NASDAQ listed, has a global satellite constellation, has 66 satellites that cover the globe from pole to pole, has been in operation for over 25 years. And I guess the benefit we have is the quality of that network and the services that provides. It's very targeted at the portable and mobile communications devices, has very high signal penetration, which gives us the ability to be able to develop products that meet various market applications, particularly in the personal communication space. So, whilst there's a lot of noise out there at the moment, we're very comfortable that the products that we're developing are, fit for purpose. They're obviously very robust. They work off the Iridium network. The level of signal they provide people and the ability for those products to work globally is very important. One of the biggest challenges for a lot of these new satellite players, and there's been quite a few satellite entrants into the market over the last 5 years that haven't made it. And I think it's very important to recognise that Iridium has the right to use their service just about everywhere on Earth, from pole to pole. It's been licensed for many years, 20 plus years. A lot of those licenses and access to spectrum is a very challenging component for many of these new operators. So, the ability to have the Iridium network that works anywhere on Earth, that's very compact and enables us to develop products around that is important. Also, the transition from us from just being a product development company to providing services to direct end users is a major change in our business structure, and also provides recurring revenues for longevity of revenues and profits. So, we're quite excited with the position that we're sitting in. We're comfortable that the products that we have, compete with some of these larger companies head on. We get a lot of support from Iridium. Iridium themselves, understand the products that we bring to market, and we continue to innovate. And whether we're doing products on behalf of Iridium under an OEM model, or we're developing products under the Beam brand, or it's through a joint venture like the Zolio product, we believe that we've got very good market access and draws on our 20 plus years of experience in the satellite communication space.
That's really excellent, Michael. And I guess, a point to make is that, having Tesla and Apple, come in and be entrants into the sector, arguably creates, better awareness for the satellite industry. And so I guess there's kind of positive flow-on effects for Beam Communications as well, creating more awareness. And you guys are obviously a lot more ahead of the game. You're not new at this. You've done all your work. So yeah, it's going to take some time for those competitors to catch up, should we say. But I just have one last question for you both, and that is share price. So Beam's share price has been underperforming recently. Can you just let our small caps audience know why is that? What's going on?
Sure. I hate to say it, but the market is the market. We are very focused on controlling our business and the results. And, at the end of the day, for us, the scoreboard doesn't lie. We're coming out of a very successful year. We are optimistic that FY24 will deliver the same results as what we've seen in FY23. Delivering $40 million of revenue for a market cap of $16 million today, and having $5 million of cash in the bank. I think the market itself will end up re-rating where we're at. The important part is, as we've demonstrated over the last quarters, is that we made a very heavy investment in components to ensure that we could meet the growth opportunities, particularly for the Iridium GO exec launch as well as the Zolio product. But as we invoice those products off the back of the Iridium $20 million contract, we get cash that comes back into the bank. So, as Dean mentioned, we'll start to see that the working capital is returning from the investment we've made in those products. The cash will continue to come back into the company. We're very conscious of how we actually spend that cash and the investment that's made. But, there'll be continued cash coming back into the company. The revenue, a lot of the revenue that we're forecasting for FY24 is contracted revenues. So, it's not like it's wishful thinking that these are things that will happen. We have solid contracts with our customers in order to be able to deliver that against forecasted orders, and are quite comfortable that, the inflection point that we're at the moment, provides a very positive outlook for the company. And, with the final results coming out at the end of August, we believe that the market will start to represent, a better value for the company based on what we've been able to deliver and for what the future looks like for us.
That's an excellent answer. Thank you, Michael. I think Beam has a lot to look forward to, and, really looking forward to learning more about the developments that the company has got coming through in the near future. And yeah, just want to say thank you so much, both of you, Dean, Michael, for joining us today. And I hope that we'll catch up again soon.
Absolutely. Thanks for your time, Jess.
Thank you, Jess.